Silver just soared 4 days in a row, breakout imminent. For 4 straight trading sessions, silver has climbed higher, quietly, consistently, and now investors around the world are asking the same question. Is this simply another short-lived rally, or is the market standing just one step away from a breakout that could reshape the entire precious metals landscape? Behind these rising prices, something much bigger may be unfolding. Growing geopolitical tensions, shifting Federal Reserve expectations, stubborn inflation, and a market that appears to be changing direction when very few expected it. But here's the real mystery. What if these 4 days are only the beginning, and the biggest move hasn't happened yet? Stay with us, because the answer may completely change how you look at silver over the coming weeks. Welcome to Next Alert, where we break down the biggest developments shaping the global economy, financial markets, gold, and silver in clear and practical terms. And before we begin, if you enjoy thoughtful market analysis without unnecessary hype, consider subscribing to the channel. It helps us continue bringing you timely economic insights that are easy to understand and valuable to follow. We'd also love to know where you're watching from today. Tell us your country or city in the comments. We always enjoy seeing our viewers from around the world. Now, let's uncover why silver's 4-day surge has the entire market paying attention. Silver has now done something that investors have not ignored for years. For 4 consecutive trading sessions, the metal has continued climbing higher, drawing fresh attention from traders, institutions, and long-term investors alike. On the surface, 4 days may not sound extraordinary. Markets rise and fall every day, but experienced investors know that when momentum begins building consistently instead of randomly, it often signals that something deeper is changing beneath the surface. The question is no longer whether silver has moved. The real question is why it has moved, and whether this momentum has enough strength to continue. During the past several days, silver has outperformed most major precious metals, delivering stronger percentage gains than gold, while once again reminding investors why it has earned a reputation as one of the market's most volatile assets. Unlike gold, silver rarely moves in small, predictable steps. It tends to remain quiet for extended periods before suddenly accelerating in one direction, rewarding those who positioned themselves early while leaving late participants struggling to understand what changed. This latest rally has placed silver back into conversations that extend far beyond commodity markets. Investment firms, manufacturers, central banks, and business leaders are all watching the same charts, but they are not necessarily searching for the same answers. Some are looking for signs of inflation. Others are trying to measure the health of global manufacturing. Many are attempting to determine whether investors are quietly preparing for a period of greater economic uncertainty. That is what makes silver different from almost every other asset. Its price rarely reflects a single story. Instead, it represents the intersection of several powerful forces moving simultaneously through the global economy. At first glance, the recent gains may appear to be another routine market rally. However, experienced analysts understand that markets often reveal important changes gradually rather than all at once. 4 consecutive advances suggest that buyers have remained committed despite normal opportunities to take profits. That consistency matters, because sustained buying pressure usually reflects growing confidence rather than emotional speculation. Even more interesting is where this rally has taken place. Silver is now approaching a price zone that has repeatedly challenged previous advances. Financial markets often remember important price levels. When an asset approaches a level where selling pressure has previously overwhelmed buyers, investors begin watching much more carefully. Some expect another rejection. Others believe that if enough demand continues building, resistance eventually weakens until it can no longer contain the advance. This creates one of the most fascinating moments in any financial market. Every new trading session becomes a test of conviction. Will buyers continue stepping into the market with enough confidence to absorb increasing selling pressure? Or will profit-taking once again force prices lower before any meaningful breakout can develop? For business owners and entrepreneurs, this question extends beyond precious metals alone. Commodity prices frequently provide valuable insight into broader economic conditions. They reflect changing expectations surrounding inflation, industrial activity, monetary policy, and global confidence. When silver begins attracting attention, it often signals that investors are reassessing risks across multiple sectors rather than reacting to a single headline. Still, caution remains essential. Financial history is filled with rallies that appeared convincing before suddenly reversing direction. Momentum alone does not guarantee a lasting trend. Lasting trends require support from larger economic forces that continue encouraging investment long after the excitement of the initial move has faded. That is precisely why this 4-day rally deserves closer examination. The charts reveal only the outcome. To understand what may happen next, investors must look beyond the numbers and examine the global forces quietly influencing capital flows. Because behind silver's recent surge lies a much larger economic story, one that stretches from geopolitical tensions and energy markets to inflation expectations and central bank policy. Those forces, rather than price alone, may ultimately determine whether silver is approaching a genuine breakout or simply another temporary pause before the market changes direction once again. Markets rarely send invitations before they change direction. Instead, they leave behind a series of small signals that often appear unrelated until they are viewed as part of a much larger picture. A rise in energy prices, a shipping disruption thousands of miles away, a subtle shift in central bank expectations. Individually, these events may seem insignificant. Together, however, they can redirect billions of dollars across global financial markets. That is exactly what makes silver's recent rally so intriguing. Many investors assume silver is climbing simply because demand for precious metals has increased. But the reality is far more complex. The metal is responding to an economic chain reaction that extends far beyond the commodity market itself. One of the biggest catalysts is the growing uncertainty surrounding global trade routes. When critical shipping lanes become unstable, the effects are not limited to cargo vessels or energy companies. Delayed shipments increase transportation costs, disrupt supply chains, and create uncertainty for businesses that rely on predictable deliveries. Manufacturers begin reassessing production schedules, importers face higher expenses, and investors start questioning whether inflation could remain elevated for longer than expected. Financial markets respond to uncertainty faster than the real economy. Money rarely waits for official confirmation. Instead, it moves toward assets that investors believe can preserve purchasing power if economic conditions become more difficult. Historically, precious metals have often benefited during these periods, but silver occupies a unique position because its value depends on far more than investor sentiment alone. Energy prices add another layer to this equation. When oil prices rise, transportation becomes more expensive. Higher fuel costs gradually spread through manufacturing, logistics, agriculture, and retail. Businesses eventually face difficult decisions. Some absorb the additional costs, reducing profitability. Others pass those costs on to consumers, creating fresh inflationary pressure throughout the economy. That is where central banks enter the story. If inflation refuses to cool, policymakers may decide that interest rates need to remain higher for longer. Even without an official announcement, financial markets constantly attempt to anticipate the next move. Investors adjust portfolios based on expectations rather than waiting for decisions to become reality. This creates an unusual environment for silver. On one side, geopolitical uncertainty encourages investors to seek tangible assets. On the other, the possibility of prolonged high interest rates creates pressure on non-yielding assets such as precious metals. These opposing forces are now competing at the same time, making every trading session increasingly significant. Yet another factor deserves attention. Unlike previous market cycles, today's investment landscape is shaped by the speed of information. A headline released in one region can influence trading decisions across multiple continents within minutes. Institutional investors, hedge funds, and algorithmic trading systems react almost instantly, amplifying price movements before retail investors fully understand what is happening. This helps explain why silver's recent advance has felt unusually persistent. It is not being driven by a single news event. Instead, multiple global developments are reinforcing one another, creating momentum that appears stronger than a typical short-term rally. Still, momentum alone cannot guarantee a lasting trend. If geopolitical tensions begin easing, inflation cools faster than expected, or central banks signal a more aggressive monetary stance, investor sentiment could change just as quickly as it improved. Markets are constantly weighing probabilities, and today's strongest narrative can become tomorrow's greatest disappointment. That uncertainty is precisely why experienced investors are watching far more than silver's price chart. They are monitoring oil markets, shipping activity, inflation expectations, and central bank communications simultaneously, knowing that the next major move in silver will likely be decided by the interaction of all these forces rather than by any single headline. And while those macroeconomic forces continue shaping investor confidence, another powerful driver is quietly working beneath the surface, one that separates silver from every other precious metal and could ultimately determine whether this rally has the strength to become something much larger. Imagine two investors looking at the exact same piece of silver. One sees it as protection against inflation, currency weakness, and financial uncertainty. The other sees a critical industrial material that powers advanced technology, modern manufacturing, and the world's transition toward cleaner energy. Surprisingly, both are correct. This is what makes silver one of the most misunderstood assets in global markets. Unlike gold, whose value is driven primarily by investment demand and central bank reserves, silver exists in two completely different worlds at the same time. It is both a precious metal and an industrial necessity. And when these two identities begin moving in the same direction, the market can change far faster than most investors anticipate. That dual identity is becoming increasingly important. Every smartphone, semiconductor, solar panel, electric vehicle, and sophisticated medical device depends, to some degree, on silver's exceptional electrical conductivity. Few materials can match its performance, making it difficult to replace in many high-tech applications. As industries continue investing in artificial intelligence infrastructure, renewable energy projects, and next-generation electronics, silver's industrial relevance continues to grow. For business leaders, this creates an unusual investment landscape. Unlike many commodities that rely on a single source of demand, silver benefits from multiple economic engines operating simultaneously. Even if investor sentiment weakens temporarily, industrial consumption can continue providing support. Conversely, when economic uncertainty rises, investment demand may strengthen even if manufacturing activity slows. This balance is what often makes silver far more unpredictable than gold. When confidence in the global economy improves, companies expand production, build new factories, and increase capital investment. That growth requires more electronics, more advanced equipment, and more industrial materials, including silver. Investors recognize this relationship, which is why silver frequently performs well during periods of healthy economic expansion. But optimism can quickly become caution. If businesses begin delaying investments because of rising costs, supply chain disruptions, or slowing consumer demand, industrial consumption may weaken, factory output declines, capital spending slows, orders for electronic components become less frequent. In that environment, one of silver's strongest sources of demand begins losing momentum. This is where the market becomes especially difficult to read. Unlike gold, which often strengthens during economic fear, silver must constantly balance two competing realities. Investors may rush toward it as a safe haven asset, while manufacturers reduce purchases because economic activity is slowing. These conflicting forces can produce sharp price swings that confuse even experienced traders. Technology adds another layer of complexity. Over the past several years, enormous investments have flowed into artificial intelligence, cloud computing, advanced semiconductor manufacturing, and renewable energy infrastructure. Each of these sectors relies heavily on precision electronics, where silver remains one of the most valuable conductive materials available. As governments and corporations continue competing for technological leadership, demand for these industries could remain resilient even during periods of broader economic uncertainty. Yet no trend continues forever. Should geopolitical tensions intensify enough to trigger a significant global slowdown, businesses may begin reducing expansion plans, delaying factory construction, and cutting investment budgets. Under those conditions, industrial demand could weaken faster than safe haven buying can compensate. Silver would then face a challenge that gold often avoids. This is precisely why analysts remain divided. Some believe silver's growing industrial importance could support a long-term structural bull market driven by technology and clean energy. Others argue that persistent economic uncertainty could eventually suppress manufacturing demand, limiting the metal's upside despite rising investor interest. Both arguments contain elements of truth. The future of silver will not depend on a single headline or one economic report. It will depend on whether industrial growth and investment demand continue reinforcing each other or begin pulling the market in opposite directions. That brings the story to its most critical stage, because regardless of how compelling the economic narrative may be, the market is now approaching a technical decision that could determine whether this rally becomes a confirmed breakout or another powerful move that ultimately runs out of momentum. Every major market eventually reaches a moment where opinions no longer matter. At that point, only price does. Silver is now approaching exactly that kind of moment. For weeks, investors have debated whether the recent rally represents the beginning of a much larger move or simply another temporary surge destined to fade. Economists have pointed to inflation, geopolitical tensions, industrial demand, and central bank policy. Technical analysts have focused on momentum, resistance levels, and trading volume. Businesses have watched rising commodity prices with growing interest, wondering what they might reveal about the broader economy. Now, all of those perspectives are converging into a single test. History shows that financial markets often hesitate before making their biggest moves. Buyers become more aggressive, sellers become more defensive, and volatility begins increasing as neither side is willing to surrender control. This battle is rarely decided in a single trading session. Instead, markets repeatedly challenge important price zones until one side finally gains enough conviction to take control. That is exactly where silver finds itself today. If buyers can maintain momentum and successfully establish prices above the current resistance zone, confidence across the market could change rapidly. Institutional investors who have remained cautious may begin increasing exposure. Technical traders who rely on breakout confirmation could enter the market. Long-term investors may interpret sustained strength as evidence that larger economic forces are now supporting a higher valuation. Momentum has a unique characteristic in financial markets. Once enough participants begin believing that a trend is real, their collective decisions often reinforce the trend itself. Additional buying attracts more buying. Confidence replaces hesitation. What initially appeared to be an ordinary rally gradually transforms into a self-sustaining movement. But markets are never one-sided. Every potential breakout also carries the possibility of becoming a bull trap. If silver fails to hold above resistance and quickly falls back into its previous trading range, many short-term traders could decide to secure profits. Selling pressure would increase, investor confidence could weaken. Those who entered the market expecting an immediate breakout might begin exiting their positions just as quickly as they entered. This is why experienced investors rarely celebrate the first move. They wait for confirmation. Confirmation does not mean a brief spike above resistance. It means the market proving that higher prices can be sustained despite increasing selling pressure. That process often separates genuine long-term trends from temporary bursts of optimism. Beyond the charts, the broader economy will continue influencing every decision investors make. If inflation remains stubborn, geopolitical tensions continue disrupting global trade, and central banks avoid aggressive policy tightening, silver could find additional support from both investment demand and industrial consumption. However, the opposite scenario cannot be ignored. If inflation begins cooling faster than expected, economic growth weakens significantly, manufacturing activity slows, or monetary policy becomes more restrictive, investor enthusiasm could fade. Industrial demand may soften while higher interest rates reduce the attractiveness of non-yielding assets. Under those conditions, silver could struggle to maintain its recent momentum. This is why disciplined investors focus less on predictions and more on preparation. Markets rarely reward certainty. They reward flexibility, patience, and the ability to adapt as new information emerges. Perhaps the most important lesson from silver's recent rally is not whether prices continue climbing tomorrow or next week. It is that the global economy has entered a period where multiple powerful forces are interacting at the same time. Geopolitics, inflation, technology, manufacturing, energy markets, and central bank policy are no longer moving independently. Together, they are reshaping the environment in which every major asset is being priced. Silver simply happens to be one of the first markets revealing those changes. Whether this becomes the beginning of a historic breakout or another temporary rally will ultimately be decided by the market itself, not by headlines, opinions, or speculation. For investors, business owners, and entrepreneurs, the message is clear. The coming weeks deserve close attention. Because sometimes the most important opportunities do not announce themselves with dramatic headlines. They begin quietly, with a few unexpected trading sessions, before eventually revealing that an entirely new chapter has already begun. Only time will determine whether these 4 consecutive gains were merely another rally, or the first unmistakable signal that silver's next major move was already underway.